Hey everyone, this is Trading Logics, and today we'll be talking about the RSI. Now, I know some of y'all are very excited for this topic because I know some viewers tend to like SMC more and some viewers like indicators more. I have to give a disclaimer here though because RSI is a very tricky thing. When it comes to indicators, there's a certain risk that you would just fall for those one of those retail logic. When people use indicators, what they want is like if I see this and that, so that. So for example, if I see 70 above, I want to take a long. If I see 70 below, I want to take a short. But do you know how many people is looking at the RSI? The RSI is actually the second most biggest indicator used by all retail traders. So basically, you're competing with millions of traders using RSI. So you have to think twice whether the RSI is something you want to use. Now, in this video, we're going to cover five things about the RSI. What is the RSI? How to use the RSI, divergences, and uptrend and downtrend mistakes, which is something that the RSI needs to be told because I remember when I was first learning of the RSI and I was not told about this basic stuff, and it costed me a lot. And the final one is how can we have a strategy? When I say strategy, I'm not saying that you have a one step by step process like, okay, if this one goes up, this one goes down, and you take a trade. Not like that, okay? I will have you a better understanding of the market when you take trades using the RSI, okay? So, what is the RSI? Well, the RSI is a technical indicator and it's used in momentum trading. If you know what momentum is trading, you're seeing those move up, down, up, down. Sometimes it goes really high in a very short amount of time, and sometimes it is fluctuating very slowly, even in the for example, if you're looking at Bitcoin, some months are going to be pushing 10K, 20K price range within a few months, 1, 2 months. But it takes 6 months and the market is consolidating at a $5,000 range. So that is what momentum trading is, and it also measures the speed of a securities, for example, crypto, recent price changes in a very small amount of time. So it uses a format. So it uses time and price. It uses time and price, and it wants to track how much price has moved in a short amount of time. So let's say within this month, how much has price moved? Depending on your time frame, that is what the RSI is. Now, the first thing we have to do is, of course, we have to open up the RSI indicator. So let's just go to our indicator section. We're going to tap in RSI. Now, there are stochastic RSI and there's Corners RSI. But then let's not complicate ourselves with all these random RSI. We're going to use the basic one, the relative strength index. Okay. Once we turn it on, I don't need you to change any specific settings. If you find it too much lines, you can remove some of them if you feel like it. But I'm just going to keep the default. I'm not going to tell you to change this and that. Let's not change anything. Okay, this is just the way it is. Okay, so let's look at it. For example, we're going to go right into the charts, and we're going to give you an example of how you can use the RSI. So how do you look at the RSI? When you see the price in a short amount of time, this is a very short amount of time, within a few hours, the price has dropped at least from 26K to 24K. That is a $2,000 price drop. And 2,000 is a lot, especially within an hour. 2,000 drop is a lot. That is about a 4% drop, if I'm not mistaken. That is a 4 to 5% drop in an hour. That is very aggressive, and the RSI shows a drop. So, just so you know, the RSI has two areas here. The first area I want you to focus, let me just expand this thing so you can see it. The first thing you can see is the upper zone, which is above the 70 mark and below the 30 mark. Anything below the 30 is considered oversold, and anything above 70 is considered overbought. Now, general rule here, if we are overbought, we're looking for shorts. If we're oversold, we're looking for longs, because it's already oversold. You don't want to be shorting and oversold. That doesn't make sense. That's one thing that you want to pay attention to. The second thing is the yellow line. The yellow line, if I'm not mistaken, is an EMA, but we don't really have to pay attention to it. We just need to pay attention to the purple line. The purple line is what matters. Whenever we deviate outside of this 70 and 30 range, that is when we need to pay attention to the price. Now, please do not get me wrong. Please do not say The price went outside of the box, therefore I can take a long. That is not how it works. That would never be how it works. Do not say that the price is overbought so I can short. The price is oversold so I can buy. The general rule and actually taking a trade are two different things. So separate it very well. Do not take a trade just because you see an overbought or an overshot. That's really inconsistent. I tell you that if you do it, you're gonna fail miserably on that one. So another example of overbought is, let's say here we have a very quick move up like this in within like 30 minutes. So that's considered overbought. We are buying aggressively, and what happens afterwards is the price immediately fluctuates down. The same thing happens. We're oversold, and what happens after that? We go up from here. Okay. Now, let's give you another few more examples so you can understand the RSI better. So let's say here, this one has peaked very low, as you can see at this chart point right here. This is peaking very low right here. Okay, it's extremely oversold. And what happens is the market goes up, and then from here on out, we reach another overbought situation, which is here. And then, well, like I said earlier, if you're overbought, we're looking for shorts. And if you did take a shot, it might have been a really good trade. So that's one thing I want you to pay attention to. Okay. So the RSI is a bit refined. You can see a little red area. Whenever you see a little red gradient area, that is when it's extremely overbought or oversold. Okay. So that's one thing you want to understand. Okay. So the next thing I want you to pay attention to is divergences. Divergences is something that happens in the chart almost every time. An example of that is, I'll give you a blank chart. For example, let's say the RSI is, this is the RSI, this is the RSI moving up, but the price is actually going down. So let's just make one thing clear. One thing is the price, one thing is the RSI. This is the price. The price is moving down, it's moving down, it's moving down. But the RSI is actually moving up, moving up, moving up. So that's one thing you want to remember. Sometimes the RSI can go up, but the price exactly at the same range goes down. So if you pull it down exactly and it intersects each other, if it's like that same area, that means the price is having a divergence. And when divergence happens, what it's trying to tell you is that the price wants to reverse the other direction. So I'll try to find an example of a divergence. Sometimes the price does something like this. The price move higher, but the RSI, it doesn't make a higher high. Instead, it made a double up. So that is also considered a divergence because clearly the price, this is the, let's say this is the trading view chart and this is the RSI. The bottom one is the RSI and the top one is the price. The price actually made a higher high, but we did not make a higher high in the RSI. So what it's trying to tell you is that that is a divergence. Vice versa, if we did make a lower low instead, for example, the price did this, but the RSI only did this, that is considered an divergence. It's same for a scenario, up, down. It's all the same thing. If we get all this type of stuff, that is considered divergence. Okay, one lower low and a higher high, but then this one actually makes a lower low, so that is a divergence as well. Okay, this is an example of a divergence, and what the divergence is trying to tell you is that it wants to reverse. Here, this is a very good example of a divergence. I'm going to use this line and I want you to pay attention because divergence is by far one of the most important thing about the RSI. Because looking at the RSI itself is very confusing and you might think, well, it's just overbought and oversold. It's very simple. It's just, buy when you are oversold. It's not like that. Trust me, when you try it out, it's not going to work. So I want you to look at here. Okay. If you're a very new beginner, I want you to practice this habit of pulling your price down like this. Okay, pull it down at the lowest point, and I want you to use the same strategy. What do you see here? I'm going to pull this out. I'm going to pull this up like this. So let us see what happens. Let me just draw it out. Okay, this is the second point I want you to look at. What do you see here? The price, okay, made one low and another lower low. It's not a big difference, but there is a lower low here. If you go into this chart and you zoom it in, you can see a lower low. But the RSI did not make a lower low. Instead, it made a higher low. It made a higher low. This one made a lower low, but this one made a higher high. Sorry, a higher low. Okay. So if you use the green trend line to actually visualize this properly, you have one that is going down, which is what we call a divergence. We have a moving down trend line and we have a moving up trend line. That is what we call a divergence. So what did I say about divergences? the price will reverse, and it didn't it? This move up considered this move up. So let's see how big of this move is. Let's see. I'm gonna guess at least 7%. This is a 7% move up. 8% actually. Oh, that should be exaggerated. It's 7%, yes. So it's a 70% move from here to here, you know? So this divergence is actually a very powerful indicator of the RSI. So let's just find you let me find you another example of an RSI. The divergences happen very often, so you don't have to worry about them coming out only once in a blue moon. And just a classic example, when you're trading divergences, I want you to be very careful and look at the high time frame only. Start with the 15-minute if you can, but always remember that the higher the time frame that you're looking at, the better the RSI. Okay, if you're looking at a very low time frame RSI, it's going to be very tricky for you. Okay, if you're looking at the 1 minute RSI, it's very unlikely that it's going to be accurate because most people make the mistake of trading the very low time frame. They're trading the 1 minute, but then they end up the RSI say it's overbought, but then immediately the price continues to go up and they're confused. Is the RSI broken or something? But then it's not broken. You're looking at it the wrong way. Another example we're seeing here is actually a move like this. So this is a sub-divergence. There are many types of divergence, but I'm not going to go too complicated with the divergences. From here, we can see the price continues to make higher highs, higher lows, higher high, higher lows. But the RSI only managed to make until here, and it actually made a lower low, okay? And it actually made another kind of consolidation, and the price kept making higher highs, but the RSI did not. The RSI was consolidating. So this is also an example of a divergence. And what happens after a divergence is, well, this move down. It continues to go down. And so, if you want to know behind the logic why the RSI divergence is actually working out, the RSI divergence is like an accumulation thing. Imagine yourself, like a Pepsi. You put a mental, let's say you have a Pepsi, okay? Let's say you have a Pepsi bottle and you're shaking it, you're shaking it, you're shaking it. And eventually, that thing is going to burst. The second you open that cap, it's going to burst. It's like the same thing. The RSI is like, when you have a divergence, it's actually building up that momentum. Like I said, it was a momentum indicator, and it's building up. It's a field, and you're constantly building up. As more people enter into the market, they're going to have stop losses. They're going to have take profits. They're going to have trades. They're going to have entries. They're going to have positions. They're going to have limits. They're going to have market orders. When all these imbalances, everything stacked together, they're bigger and bigger type of liquidity points. That is something that we will talk about in the future. When it creates liquidity points like this, it kind of just bottles up like a Pepsi, and it just wants to burst, but you don't know exactly when. Okay, depending on the time frame, if you have a divergence and you can spot it already, if you can use a trend line and you can visually draw out the divergence, it's about within. If you're looking at the 15-minute, it's within a few days that you will see something like that. If you're looking at the 4 hour, it might take a few weeks to see that divergence. So that's something that you have to pay attention to. Okay, so this is it for divergences. I want you to go to your chart if you can and just keep looking for divergences. Practice your eye. It's fairly simple to look for divergences. It's not really that difficult. And trust me when I tell you that divergences happen very often. Okay, let me just give you another example of a divergence. Okay, RSI is an interesting topic because most retail like this concept, but I don't want you to just follow in the classic way of overbought, then you sell, and if you oversold, you buy, and then you have a specific indicator. You have all these funny stuff. I don't like nonsense like that, because what it encourages you to do is you just follow the indicator. You're looking at a bunch of lines moving again, but you don't understand what it means. You see the RSI, you see the lines in the RSI, but you don't understand why are there lines, why are there lines, what is this line meaning. This is a momentum indicator. What is a momentum indicator? It is tracking how much the price has fluctuated in a short span of time, or let's say a designated a span of time. I don't want you to see the RSI and think of RSI as an RSI. You don't want to trade literally based on a bunch of lines. You want to understand the logic. This is what this channel is trying to promote you to do. You're trying to understand the logic behind moves so you can actually think when it comes to different situations. The market is going to keep changing, and you're going to be dealt with different situations. If you're just going to keep following dead rules, the market is actually not dead. The market is very damn live. If you're using dead rules, the live market will not show mercy. If you're using very live and changing and logic trading strategies, and when it comes to live market, it's going to benefit you. You know, so another example that you can see in the RSI is a little trick I'll give you here is whenever you see the RSI, and whenever you see a kind of like a move up like this, like an uptrend or a downtrend in the RSI, you can immediately draw a trend line. And then I want you to use a horizontal tool. If you're a new trader, it's always a vertical line, and it's always okay to draw this type of stuff just to help you visualize. Once you've practiced it enough for a few weeks or months, you can start to remove this type of stuff. Sometimes you can see divergences even without looking at it, you know. So you can very clearly see that the market here, the RSI shows that the market is actually going up, but then the price on the other hand shows the market is actually going up. So remember, the Pepsi is trying to accumulate and eventually it will burst. Did it burst? Yes, it did. This is a very tricky burst now. Not only did we actually spike up and then we spike down, we actually went back up again and then go down again. So this is a very advanced trading. I would not blame you if this was a very risky trade. I think 90% of the time, this is a news event. Now, what a news event is actually something like a FOMC, interest rate, CPI, PPI. And if you don't know what that is, that's actually an economic news, and we're really going to talk about it in the future because it's a really important topic that you have to understand. It is like something that happens. You have a bunch of red news every maybe 3 to 4 times a week, not that much, maybe 3 times a week. You know, and whenever the news releases, you know, you have crazy fluctuation in the price, and this is usually what happens. You have a move up and then you have a move down. It's trying to hunt both sides of the liquidity. So that's one thing you have to remember. So try to avoid trading within economic news. If you don't know what that is, well, I hope I can make it. I can make my next video regarding forex, forex factory, which is something that about the economic calendar. You can actually go to Google and you can search up forex factory. It's like a calendar, and if you're looking at cryptos, if you're looking at a specific set, there's actually a currency pair that shows what is being affected and what is not. So, and it also shows the degree of how powerful that news is. So that's something that you want to pay attention to. So this is divergences. The next thing I want to talk about is uptrend and downtrend mistakes. Now, remember this rule. There is no such thing as overbought in an uptrend. There is nothing such as oversold in a downtrend. Remember it very well, okay? When the market is actually going up, let me give you an example. Let's pull it down on a very clean chart, okay? If the market is going up, and the RSI, let's say this is the 70 line, right? This is the RSI, and the RSI goes up, goes up, goes up, you know. You see, this is how divergences are formed. The price is going to keep making higher highs, higher lows, but the RSI is going to remain oversold, overbought, and it will somehow go down even when the price is continuing to go up. Okay, so this is when the RSI becomes tricky. This is not as easy as you think it is. You know, at the start of the video, the first half of the video was easy. You know, RSI looking at overbought and oversold. Now you have some difficulty. Let's draw it again. If we have a downtrend, oh sorry, let me say the 30. This is the 30 mark. Okay, this is the oversold line, and we have a downtrend moving down. The RSI might continue lower and then actually continue higher. So if you took a shot here because you said it was actually if you took a long because you said it's oversold, if you took a long here, you are gonna get ripped away immediately afterwards. Okay, so this is something that you have to pay attention to. Oversold does not mean that it will automatically go back up. That's not how it works. If we are in an uptrend, we have a 70% price line. The market is able to just keep going up, and keep going down. So if you took a shot at the over spot right here, if you took a shot here, you are going to immediately get taken out of the trade. See, this is something that you have to pay attention to. If you just trade when you see an overbought, oh, it's overbought, so let me just take a shot. You actually took a shot at the bottom when people are actually longing. So this is how institutions, hedge funds, market makers take advantage of the stop losses of many people. And they're most likely going to put the stop loss here, so it's going to get hunted. So that's one thing that I want you to remember, okay? There is no such thing as an uptrend, overbought in an uptrend. So what happens if you see an overbought in an uptrend? You just ignore it. You can either take a long if you have good conditions and reasons to with logic. I thought about the premium of discount. I thought about fair value gaps in the previous video. So if you understood those topics, you can actually consider taking along if you have good reason to, okay? Or you can just ignore it because overbought in an uptrend is risky because there's no such thing as overbought. You're in an uptrend, there is no overbought. The RSI is not going to be accurate. And there is no such thing as oversold in a downtrend. The downtrend can keep going down, 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 down. And the RSI can hit zero and nobody cares. Okay, that's just how it is. Some people, they have the misconception, oh my God, the RSI is so low, it must reverse. The RSI is at negative, it must reverse. But that's not how it works, does it? How many times, if you don't believe it yourself, and I assure you, if you see overbought and you immediately take a shot, it will not work out every time. You have to have good reason behind it. This is why I say the RSI is a very retail concept because people like it a lot, but they don't understand how to use it. They just want to use it because it's a line and it's easy to visualize. But then it's easy to look at, it's easy to comprehend, interpret it. But then they don't know the little facts about how to use an RSI. You know. So I won't give you a strategy here because there aren't any strategies. There aren't any RSI super strategy that you can use and you can become a millionaire within a year or anything like that. There's no such thing. I don't know if you guys, because as a trader, most people want something like, oh my God, I want this thing, I want that thing, I want okay. If I see this, if I see overbought, then I wait for 3 minutes and then I see this and then I pull this trend line and then I take a long. That is not how it works. There is no such strategy because most people want this type of strategy because it's easy, it's a system. But then if you somehow create it, good for you. But I don't believe in something like that. It's not sustainable, even if you find it profitable in the long term. In the short, sorry, in the long term, it might not be profitable. So I won't give you a strategy, but I will give you a little tip here. We learned about premium and discount in the previous video, didn't we? And we also learn about fair value gaps. Okay, so apply fair value gap. So for example, I can see a fair value gap immediately right here. Okay, and let's just look at the RSI. Where are we here? We are right here. So this is how you can apply what we learned in the previous video and how we can use it. For example, if we're seeing here immediately, if we look down to the RSI is oversold. Okay, and we have the fair value gap, okay, right here. So the price is approaching oversold area. So let's just look at this area again. The price is approaching oversold, okay, and we have a fair value gap, and we're actually, let's see if we're in a premium or discount. So we're just gonna draw it. This is what we call an order block. Let's use the guide box. Are we in a premium or are we in a discount? Sorry, this is not how you draw it. This is how you draw it. So we are actually in a discount. We are in a discount. We have a fair value gap, and we have an RSI approaching the oversold. So how can you use the RSI in this situation? It's more of a confirmation. It's more of a supplement. It's more of an extra. It's not a leading indicator for you to take a trade. It's not a decision maker. The thing that makes you decide whether you want to take a trade should be yourself. It should be your logic. It should be why you think it works and why you think it doesn't work. It's not supposed to be an indicator. Trust me on this one. It is never supposed to be an indicator that helps you decide, okay, I'm gonna take a long, I'm going to take a short. You can never rely on an indicator. Never should you ever do it. Okay, never should you ever do it. That's just so bad if you do it. Okay, it's just a really huge mistake. I'm trying to save you a lot of time and effort. Okay, so RSI is how you use it. Premium, fair value gap, oversold. Okay, if you have not watched this video, I really suggest you to watch in the previous video. You can start with the first video and you can actually learn about what premium and discount is. All of these topics are extremely interesting because really nobody talks about this type of stuff. People talk about the famous RSI and MACD and all that stuff, but then at the end of the day, I know you watched a bunch of YouTube. If you are exposed to really famous contents, I'm sure you have watched some sort of videos learning about how to use RSI MACD, but then when you try out the strategy, it doesn't work at all. And I'm sure this video is very long and I'm boring you already, so I'm gonna end the video very soon. So thank you for watching for this video. If you find this video helpful, please like and subscribe. You can consider doing that if you feel like it. Um, I'm a very new creator, so your opinion really matters. If you think my videos are a bit boring, if you think they're too fast, they're too slow, if you think I'm informative, if you think I'm not so good, I'm very confusing. If you have a question about the video, please let me know in the comments. Just say, oh, I don't understand. give me a timestamp maybe, or maybe you can say, I don't understand why the RSI is like this. Can you give me the reason? I will explain it in detail in the comments. So this is it for the video. I hope you have a great day, and goodbye, and thank you.